Welcome to CFTC Talks. I'm your host, Andy Bush, Chief Market Intelligence Officer for the CFTC. Just a quick reminder, there's an important disclaimer at the end of the show that's important for you to listen to. This week, we have part 2 of our conversation with the UK Financial Conduct Authority's Nick Cook and Lab CFTC Director Daniel Gorfine. We cover a wide range of topics, including AI, machine learning, and blockchain. Please enjoy.
Andy, I have one quick follow-up actually for Nick.
No, go ahead.
You mentioned the concept of explainability of machine learning. Can you explain what explainability means?
That'd be helpful. We're Yanks. We need some stuff explained to us. So,
broadly, what people tend to refer to is the transparency of the algorithm. So, how easy is it to understand the outputs that the algorithm is generating based on the inputs it is receiving, and can you understand why it is producing those outputs based on what it was what it was fed in terms of input? So how transparent is the process by which the algorithm converts inputs to outputs? How auditable is it? So to what extent can you see kind of, I guess, almost line by line what the algorithm is doing or not? And who's had a say, who's had control over the development of that algorithm? So at one end of the spectrum, you have highly supervised machine learning, where humans are heavily involved in formulating the algorithms and helping to train the machine. And then at the far end, you've got deep learning, where the machine has much more autonomy to try and come up with patterns and decisions of its own making. And so explainability is really trying to get under the skin of, really what is the algorithm doing? Can we understand it? Can we explain it to a human? Or is it, as is often feared, a black box type solution where we really don't understand what's happening?
Yeah, and I think where this gets really interesting, just to make this concrete for people out there, is when banks are making loans, right? And so if they have an algorithm that's saying, well, these people are creditworthy, these people are not, you run into the probability or the possibility of what we had here in the 1950s and 60s of redlining districts, where loans are just not made to certain communities based off of faulty inputs to some extent. And so I think when you get into this, especially when you get into kind of the black box stuff, that's where it gets really tricky, because that's the whole point of the black box, is for it to make decisions that humans can't see, and they can't see the relationships, but the algorithms can learn and figure it out.
Yeah, I think that's right. And so I think you're right. At the heart of the concerns about unexplainable, if you like, or hard to explain AI, there are concerns about exclusion of certain consumer groups. Mm-hmm. There are concerns about the algorithm acting unethically, actually, because perhaps it's just been given an outcome of, profit maximization, but hasn't been told you can only pursue profit maximization within these parameters. So if you don't understand, the rules of the game that the algorithm is playing to, and you're not able to explain it, then of course you run into quite a lot of concerns about, exactly what risks are we running here, and who's responsible when something goes wrong.
Yeah. No, that's a great point. I love the fact that you're going to get into, let me just switch back to what you were talking about, what's coming up. You're talking about AML, right? Anti-money laundering. And when we get into some of this stuff, of course, I'm sure everybody's going to do a little name dropping, which is blockchain. Just quickly, how is that going to be incorporated in kind of the overview of what you're doing? I think it's May 22nd. Dan, you're going over there when? May 22nd? Is that when you're heading over?
Yeah, so I'm heading over for a few days. Yeah, I'll mention a few more exciting things we'll be doing when we're over there in London. But yes, that week of May.
Yeah, so Nick, if you could just incorporate, how are you guys going to bring in blockchain into what you're doing?
Well, in relation to the TechSprint specifically, and as you say, it's the 22nd to the 24th of May. There are there's 2 or 3 specific use cases that we've set for the TechSprint participants around blockchain or around distributed ledger technology. Mm-hmm. So one of the problem statements or questions that we've posed is effectively, how do you embed fraud checks, money laundering checks, sanction checks, those kind of things into in some cases an open, fully open distributed payment system? Who is responsible for undertaking those kind of financial crime checks, where where you've got a federated blockchain-based payment system. The flip side of it, so I guess that's kind of the risk of blockchain may be that it is harder to embed these controls. The flip side is, well, one of the opportunities potentially is that if you have tokenization of units of value, which is broadly what you would do on a DLT blockchain type system, is it easier to track that cross-border than perhaps it is with existing financial systems? And I don't think anyone's really kind of explored yet whether there are opportunities from the kind of the immutable record keeping that you get with a blockchain in the financial crime space. Are there actual potential benefits and opportunities here? So we've got a couple of specific use cases.
Yeah, sorry, Nick. I wanted to just jump in for a second. I mean, that's a very, very good point. I think it's a very interesting point. When we talk to people about blockchain and DLT, of course, there's a lot of concern about some of the technologies that many would define as being anonymized in terms of transactions. But you're absolutely right that it's important to highlight that a lot of these systems do create permanent records that are actually traceable. So I think flipping this to see what advantage can that provide from an anti-money laundering and financial crimes detection perspective is actually really important. So that's great that you guys will be looking at that.
Absolutely. And I mean, the answer may be there is no benefit, but what better way to explore it than with 200 or 300 people from around the world all coming together for a couple of days?
Yeah, so, picking their brains. Yeah. That's awesome.
Right, absolutely.
So Nick, to the point of people coming from all around the world, I just want to at least from our perspective at the CFTC, I mentioned to Andy earlier that how excited we are to have a first for us, a fintech cooperation arrangement with the FCA. And I view this conversation and the fact that I'll be heading over to London soon to actually observe one of your hackathons as kind of symbolizing what that relationship is all about, where we can share information, learn from each other, and then kind of see best practices in terms of how we engage with fintech and RegTech. So I'm very excited, and I think this is a really good representation of what that type of a relationship can provide. But let me just ask you, you all have been doing this now for a number of years, and you have a lot of relationships with other international regulators. What do you find to be some of the benefits of those relationships, and what works best?
Yeah, so I think we're very much keen and looking forward to this interaction as well and this experience. I think this is a new area for all of us. The fact that some of us have been active in it for 2 or 3 years, that is the totality of time frame that we're talking about here. So this is still new ground for all of us. And each of our markets, as a result of market-specific dynamics, will ebb and flow and develop in slightly different ways. And so I think through these cooperation agreements, we get to see how are these technologies developing in different market conditions? How are different business models being brought to bear in different jurisdictions? To what extent are consumers engaging or not in those new product offerings? What are some of the regulatory, or what are some of the consequences of different approaches to regulating these kind of new products and services? And frankly, how do we as a set of regulators across the world, in what way and how should we modernize ourselves, both in terms of our resourcing structure and how we organize ourselves, in terms of the kind of capabilities we try and develop and attract into the regulators, in terms of how we use technology ourselves. So I think we see there's probably what we've seen early on is that there are no two cooperation agreements or relationships that are exactly the same. So from each of the different entities that we have these agreements with, we get something slightly different. From some, it will be kind of cutting-edge insight on what's happening in the market. From others, it will be that they themselves are aggressively pursuing machine learning applications internally, and we can learn something from that. And indeed, from others, it's just that they have different methods of engagement, different ways of stimulating or catalyzing or encouraging development of their market. And we all have, to some extent, very similar objectives, but we don't all have the same powers and the same mandate. So we can see by working with different partners, what works well, what's possible. We were able to put together hackathons. I know that there's other parts of the US infrastructure that would find it really hard to run that sort of event at the moment. So why don't we, we're very keen to host you and have you over here and let you see the benefit of it, and we'll hopefully come and see the benefit of an equivalent event at some point in the United States. So I think we get a huge amount from it, and we are all at an early stage in our learning. And so what better way to learn than through some collaboration?
Yeah, that makes a lot of sense. Hey, I just want to get back to something that's really cool that what you're doing. Speaking of cutting edge, in the RegTech space, maybe you could talk about some of the things that you guys are looking at with, like putting your rule book as, machine readable, self-execution on some of the regulations, because I think that's really what's neat about the things that you've been doing and some of the places that you're going. If you could just elaborate on that a little bit.
Yeah, happily. So, when I mentioned earlier on that one of the first things we did was we spent about 6 months talking to various parts of the market, saying, A, what role should we play, but also B, what kind of topics do you want us to focus on? And one of the ones that came through quite loud and clear was actually in the regulatory reporting space. So the exchange of data between the industry and regulators, and firms were saying to us, we find it expensive, we find it complex, we find it hard to understand necessarily what you want. And bear in mind, we then have to try and deliver reporting requirements to regulators all around the world. So this is a problem that then multiplies up the more jurisdictions that we operate within. So we had a TechSprint, a hackathon TechSprint event back in the back end of 2016. And we at that point we asked a very open question of, how would you go about modernising regulatory reporting using some of the technologies that exist today? And we saw a real mix of answers to that question, some of which we're looking at, you should create mechanisms for crowdsourcing interpretation of these requirements. You should look at moving to a distributed ledger technology back to regulatory reporting system where you pull reporting data from firms on demand rather than them pushing data to you. And then we saw this, and then this idea that gained a lot of traction was, well, what about if you wrote your rules, your law, your regulations in a format that doesn't require any human interpretation and could be directly implemented into firm systems? So you strip out all of the cost and time and complexity of human interpretation and implementation of systems. And so this idea of machine executable regulatory reporting rules gained some traction. And we spent some time throughout last year on a series of sort of mini experiments with parts of the industry. And I should say at this point, our learning to get to where we've got to is the product of a collaborative effort by multiple industry participants. We are not the holders of the intellectual capital that has got us to this point. We have been able to benefit from the sharing of that knowledge from others. And so we spent some time over the course of last year building up to a longer tech sprint back end of 2017, where we basically said, is it possible with the technology that exists today, and preferably open source technologies, is it possible to write a reporting requirement in a way that is fully unambiguous to a machine, can be coded in such a way that it could be written as an executable script, and can that be ingested into firm systems so that effectively you have straight through automated compliance with a regulatory reporting requirement? And so what we found in that tech sprint is broadly the answer to that question is yes. Now, there is... what isn't clear, which is great. But in a way, it's one of those ones where if the answer was no, we at least say, well, at least we tried. But the answer seems to be yes.
Right. Good.
But, so where we're at now is we're in a big kind of open consultation about actually. We think it's possible. Is it beneficial? How would you govern it? Is this scalable? How would small firms versus large firms cope with any technological implementation that they would have to do to make this work? So we're really in a very open period at the moment of saying, well, we've got an answer to this question that we think makes some sense, but please now critique it, pull it to pieces, put it back together with us so that we can have a much more robust idea about how one would go about implementing this if it was desirable.
Andy, I bet when you launched CFTC Talks last year, you never thought we'd be talking about robo rulebooks, but here we are. And I have to just mention that, as part of our crowdsourcing for innovation competition topics that we were talking about, Andy, this is, as I mentioned, this is one of the concepts that we'd love to get additional thought through our comment process. So we talk about the robo rulebook. We talk about making rules machine readable and maybe even machine executable. And so I think hopefully we can benefit from some of the work that the FCA has done and that Nick has led and maybe build on that. So we're looking forward to additional thoughts and ideas on that topic.
Well, let's wrap this up here. I know Nick's busy, Dan's busy, but for the rest of 2018, Nick, let me just ask you, like, what are you going to be focused on at the FCA? Like, well, give me your playbook for the next 6 months or so.
Sure. So, as we've already mentioned, this AML TechSprint, this money laundering focused TechSprint, is on a scale like nothing we've ever done before. We've got at its peak we'll have over 400 people in the mix from 150 organisations from something like 25 countries. So this is a big deal. This is a kind of industrial scale innovation event. Like we've never done before. So there's a lot of my team and my effort and focus at the moment on making sure that we get this one over the line. My hope from that really is it creates a kind of almost like a lightning rod moment for the industry at large to come together and say, look, we understand the scale of the problem here. We understand that there are some routes forward, and we are inspired and motivated and energized to start doing something about that. And I think that will create a really interesting set of expectations and responsibilities for us as regulators to see, well, what role do we need to play in helping to drive that innovation forward. So I think the next 6 months will be heavily framed around that piece of work. Secondly, as I say, we're in the midst of pretty extensive consultation about the machine executable reporting work. We've got 2 pilots as well that we're kicking off in relation to that work with a small group of financial institutions in the UK to just see, what does the next stage look like. We did a very, very small proof of concept. We now need to try and scale it up to the next phase before we look at kind of full-scale implementation. So we've got a couple of pilots running for the next 6 to 9 months to see how you would do that and how that would work. And then, as you briefly mentioned in the opening, I'm responsible for trying to build out the FCA's analytics capabilities in its broadest sense, in fact, but really looking at how do we start to deploy some of these technologies ourselves. So I've got 15 or 20 projects on the go at the moment across a range of machine learning, natural language processing and AI type use cases. So I think the next 6 months really are about proving out internally the value of some of these techniques and technologies, with a view that we start to embed some of them into our frontline work in supervision, enforcement and elsewhere. So I think the next 6 months will be a busy period for us of experimentation, but also recruitment and development of our skill sets and our capabilities to undertake this work.
Fantastic. All right, FCA RegTech leader Nick Cook, thanks for coming on the show today.
Thanks, Andy. Good to speak to you both. Thanks, Daniel.
Thanks very much. This was fun.
That's a wrap for CFTC Talks this week. Hey, thanks for tuning in to the second part of this interview that we did with Lab CFTC Director Daniel Gorfine and UK FCA's Nick Cook. It was a blast, and I hope you enjoyed it. Remember, if you want to hear more podcasts, you can go to our website at cftc.gov and click on the podcast button, or you can find us on iTunes, Stitcher, or wherever you listen to your podcasts, or just click on your podcast app on your phone and type in CFTC Talks. We'll be back next week with another guest on our quest to learn about the markets we watch. For Daniel Gorfine at Lab CFTC, I'm Andy Bush. Thanks for listening. But wait, we're not done yet. It's time for a disclaimer. The CFTC is providing this information as a public service, and it is neither a legal interpretation nor a statement of CFTC policy. Reference to any specific product, service, trademark, manufacturer, or service provider does not constitute an endorsement or recommendation by the CFTC. The CFTC is not liable to any consumer or any third party for any direct, indirect, incidental, consequential, special, or exemplary damages or lost profit related to the use of the information provided or referenced in this podcast. Selection of guests on the podcast does not imply an endorsement of any particular individual or entity. Many individuals and entities provide similar services to those of the guests. The views and opinions expressed by the guests in the podcast are their own and not specifically endorsed by the CFTC. Moreover, the information provided in this podcast should not be construed as investment advice. Consumers should rely on their own inquiries as to accuracy and relevance of the information incorporated or referenced in this podcast and assume the entire risk related to its use. The CFTC is providing its interpretation of market trends solely to inform the public of a framework for projecting possible outcomes under different scenarios. If you have any questions concerning the meaning or application of a particular law or rule administered by the CFTC, please consult an attorney.